Silver just lost its seat to Bitcoin, yet the real twist isn't about precious metals at all. The shocker is that a quiet Cardano upgrade could actually flip the entire Bitcoin game on its head. So picture this: Bitcoin barrels through April, rockets from the low $70,000 range to 95 grand, and casually kind of knocks silver off the global asset podium with a cheeky $1.872 trillion market cap, about $25 billion more than the shiny stuff. Now, I'm watching the headlines kind of scroll across my phone while sipping kind of lukewarm coffee and thinking, cool flex, Bitcoin, but where's the real plot twist? Then I see Dan from, Cardano, kind of die-hard kind of guy behind 𝗕𝗘𝗪𝗪𝗔𝗥𝗘, right? Now, he tweets out that Cardano is about to become Bitcoin's DeFi backbone. Now, that's kind of where the caffeine really kicks in, because if those two kind of blockchains really kind of join forces, then we're not just talking about price charts. We're actually talking a whole new financial playground. So let me walk you through why this matters. Because right now, Bitcoin is the world's biggest kind of swimming pool filled with liquidity. But there are no diving kind of signs absolutely everywhere. Now, the original code never really planned for fancy smart contracts or yield earning strategies. Meanwhile, Cardano has been, observably kind of building a deep end with diving boards, water slides and certified lifeguards. Figuratively speaking, of course. But pools need water, and Cardano's DeFi scene, while growing, it still doesn't have anything close to Bitcoin's $1+ trillion splash potential. So Emurgo, that's Cardano's development arm, shook hands with Bitcoin OS last year and basically said, let's kind of plumb your liquidity into our DeFi water park safely. Fast forward to Lace 1.22, the update that kind of sneaked into my desktop wallet the other week, right? And for the first time, beta users can store and manage raw Bitcoin inside Cardano interface. No wrapped tokens, no clunky bridges, just straight BTC chilling right next to ADA. Now, Charles Hoskinson himself gave it the kind of thumbs up online, which, love him or roast him, tells you more, at least it's more than just a demo, right? It's Act 1 of Cardano morphing into a multi-chain super wallet. And the devs are already teasing a live showcase at the 2025 Bitcoin conference. Now, they're planning to demo Bitcoin transactions settling on Cardano without a messy kind of governance vote. The translation here: less red tape, more shipping code. Now, if you've ever tried to move Bitcoin onto a DeFi platform, you know that the current solutions, they feel like smuggling kind of cash across 5 borders in the trunk of a 1980s sedan, right? You wrap BTC, you cross your fingers, you pay extra fees, and pray that no bridge gets hacked along the way. Cardano's pitch is, why not let the water come directly to the slides, right? They're plugging Bitcoin liquidity into Plutus-based smart contracts where you can lend, borrow, and spin up yield strategies with native security baked in. Now, Hoskinson even went on record saying that Bitcoin DeFi could outgun Ethereum and Solana because BTC's brand already oozes institutional trust, while Cardano's 𝗕𝗢𝗪𝗓 model handles concurrency and fee predictability better than the account-based setups that sometimes kind of choke under NFT mints. But here's the potential kicker. Altcoin Oracle, one of Cardano's decentralized reps, asked ChatGPT to crunch a what if. Now, if Cardano becomes the go-to platform for Bitcoin DeFi and AI kind of spat out, a 2030 market cap range between $500 billion and a full-on $1 trillion. Now, even if you kind of haircut that optimism down a little bit, right, you're staring at a multi-$100 billion upside for ADA. So let's think about it then. Institutions already kind of clutch Bitcoin like a security blanket, right? Give them a tested DeFi rail, without the kind of bad headlines of bridge exploits, and you can watch the floodgates open. But I'm not here to sell you unicorn dreams, right? There's a real challenge baked into this plan, and it's the same obstacle that dogs every cross-chain ambition, and that's secure interoperability, right? If you kind of bosh the bridge, right, you lose the treasure, right? So how does Cardano sidestep the horror stories that we've seen on other chains? Right? The answer actually lies in something called non-custodial side contracts. Now that keeps private keys out of third-party hands, plus the 𝗕𝗘𝗪𝗧, if I can actually get my letters and my words out today, accounting model actually kind of treats each UTXO like a mini smart contract cell. Easier to audit, harder to mess up, right? And it's the blockchain equivalent of kind of splitting valuables across multiple vaults so that if one is compromised, you don't lose everything. Still, theory isn't enough, right? We'll need to see the live integration that Hoskinson promises next year, stress test it, and poke every corner for exploits. Remember, right, this is the internet's free market, right? We reward ingenuity, but, we also punish mistakes at the speed of a tweet. Now, that is why the Lace 1.22 beta matters. It's a low-pressure sandbox for real users before the big stage lights up, right, and flips on the big switch in 2025. So you might ask, okay, why hasn't anyone else married Bitcoin's wealth with slick DeFi before now? And it's actually partly because Bitcoin's core devs stay laser focused on security and decentralization. And they're cautious about kind of tacking on bells and whistles. Cardano's approach is to keep Bitcoin's base layer pristine while building programmable features in a side environment. It's kind of like having the main road untouched, but adding parallel express lanes. Use it if you want to, skip it if you don't. Okay, let's zoom out. Right? Bitcoin flipping silver isn't just bragging right. It's actually a headline that drags mainstream eyes back onto crypto again. And kind of the moment, legacy investors realize that they can park BTC in a low-risk yield farm without trusting a kind of sketchy, anonymous dev team, right? You'll see fresh capital pouring in faster than you can say risk adjusted kind of APY. Now that capital could very well route through Cardano's infrastructure, boosting ADA's utility and, by extension, its valuation. Now, here's another kind of fun metaphor, right? Imagine Bitcoin as the world's biggest stack of gold bars locked in a basement vault. Cardano is designing the elevator that brings those bars up to street level where shops accept them in everyday transactions. The vault stays kind of secure. The elevator just gives the gold, practical kind of exposure, right? Purpose. Now, if the elevator works, everyone lines up to the ride, right? If it breaks, nobody blames the gold, they blame the elevator. So the build quality matters, right? Cardano devs, they know the stakes here. And by the way, while we're unpacking this, don't forget to hop into our free crypto Discord server. There's a link in the description down below. It's where we kind of geek out over testnet experiments, share spicy memes, and dig into the on-chain data long before it trends on X. Seriously, come and say hi. Okay, so back to our story. April's 14% monthly candle gain for Bitcoin looks pretty epic until you notice that eyeballs are drifting towards the next narrative. Institutional desks are bored of plain spot ETFs. They want yield. So they want structured products that spin passive incomes, without moving coins off of cold storage. Now, Cardano's upcoming tooling could actually hand them exactly that. Remember the early days of Ethereum when anyone could kind of slap together an ERC20 and investors kind of tripped over themselves to farm liquidity? Well, we're standing at a very similar threshold, but this time the underlying asset is Bitcoin. not some kind of freshly minted altcoin. So Dan from Crypto Capital Ventures thesis, well, the Cardano, so that Cardano is the missing puzzle piece then, right? It comes down to one equation. It's liquidity multiply security multiply usability, and you end up with some pretty decent stuff. Now, Bitcoin, of course, has the first two absolutely nailed, right? Cardano claims that the third by kind of focusing on formal methods, peer-reviewed research, and an unrushed, upgrade cadence. Now, if you're new to Cardano, you've got to picture a team of blockchain engineers who refuse to ship code without running it through academic peer review. Some call it slow, others call it bulletproof. Right? For big money players, wary of catastrophic smart contract bugs, slow but safe, suddenly sounds like a convergence of service. But there's also a psychological edge here, right? Bitcoiners can be very tribal, right? They prefer pure proof of work minimalism, right? Cardano running proof of stake sometimes gets labeled as too academic, too slow, or, vaporware by skeptics. But this, collaboration, it actually flips the narrative, right? Cardano isn't just, about asking Bitcoin to change. It's saying, stay exactly who you are. Let us provide optional power-ups, right? And that kind of gentler pitch actually could melt maximalists' resistance and invite a kind of pragmatic bridge between the communities. Okay. So let's crunch a little bit of the math, because numbers keep us all honest, right? Now, as of today, right, total value locked on Cardano's DeFi is roughly a few $100 million, give or take daily volatility. Inject even just 1% of Bitcoin's current market cap, and that's about $18 billion into Cardano's protocol, and you kind of 50-fold the kind of TVL overnight. Now, imagine 5%. You don't need to be a visionary, at least a visionary kind of optimism or optimistic, to see why ChatGPT could project a $500 billion to $1 trillion ADA valuation by 2030. Is it guaranteed? Of course not, right? Is it within the realm of possibility if the plumbing holds? Well, absolutely. But let's hit pause and talk about risk, right? Cross-chain exploits have drained billions from users in the last 2 years alone. Bridges are hacker kind of honeypots, if you will, right? So Cardano and Bitcoin OS must deliver cryptographic techniques like multi-sig threshold scripts, zero-knowledge proofs, or even, some other kind of Merkle-size kind of Bitcoin transactions that keep, funds non-custodial, right? Now, the roadmap hints at kind of side chains tethered by Bitcoin's hash power and Cardano's staking backbone. That combo could make attack vectors, prohibitively very expensive. So I think burn down $500 million to maybe still $250 million. It's very expensive, right? So when theft becomes economically irrational, that's a win for users. Now, Charles Hoskinson teased that no governance vote is required for the next year's demo, which might raise an eyebrow if you're a kind of decentralized purist. But remember, not every integration touches Cardano's core consensus. Now, if the change happens at the kind of wallet layer or, through side contracts, it can roll out more like an app update than a hard fork. And that speed, ironically, comes from years of groundwork that made the base layer modular enough to handle extensions, I should say, without open heart surgery. Now, another subplot here is worth watching is, Cardano's staking community, right? If Bitcoin holders migrate liquidity into Cardano DeFi, they might scoop up ADA to stake and earn extra rewards, creating fresh demand pressure. Meanwhile, of course, current ADA stakers might redirect yields into Bitcoin paired liquidity pools, generating a feedback loop of mutual incentives. So it's kind of financial symbiosis then, right? You kind of scratch my DeFi, I boost your liquidity. Okay, now let's zoom forward to the 2025 Bitcoin conference, right? Picture the auditorium, lights dimming, Hoskinson stepping on the stage, live demo gods, hopefully smiling down. And, he pushes a button that executes a Bitcoin transaction whose logic executes on Cardano Plutus scripts in real time. The transaction finalizes, the screen shows a yield position minted on the spot, the crowd erupts, Twitter spaces explode, and your grandma texts you asking what ADA is. Right, that's the kind of key moment that we're kind of barreling towards here, right? If it goes off without a hitch, CNBC will run the clip every hour, and the next wave of institutional decks will feature Bitcoin DeFi via Cardano on slide 3. But what if the demo glitches? Markets are merciless, right? A failed demo could vaporize short-term confidence faster than a meme coin rug, right? Yet, even then, right, the underlying thesis, a secure multi-chain DeFi, remains too attractive to die. Right, remember Ethereum's very early years, right? Plenty of hiccups, you've got ETHgate, for example, yet it became the backbone of Web3 somehow. Right? Execution does in fact matter, but the direction of travel is quite clear. Right? Assets crave yield, and ecosystems that unlock it responsibly win the decade. Okay, before we wrap up, let me share how this hit me personally. Right, I started in crypto thinking Bitcoin was digital gold, store it, forget it, maybe brag at dinner parties. DeFi was something that you did on altcoin chains, right? With higher risk tolerances and double-digit APYs that often kind of smelled too good to be true. The idea that Bitcoin itself could become yield-bearing without compromising its OG security ethos feels like, discovering my old flip phone secretly supporting 5G. It's kind of mind-blowing and a little unsettling, right? But that's kind of the fun of crypto here, right? The ground keeps shifting. Your job is to surf the quake. If you're still blinking, wondering where to kind of begin, grab our Discord link. It's in the description below. Jump in and lurk on the kind of Cardano Bitcoin channels. And, we dissect wallet tutorials, follow Lace beta patch notes, and share sandbox scripts so that you can practice without kind of risking, real Satoshis, if you will. Learning in public is how we all level up. Quick recap then for all the kind of folks, I guess, speed reading. Bitcoin smashes silver's market cap at $1.872 trillion. Cardano's Lace 1.22 lets you hold real BTC inside a Cardano wallet. Emurgo and Bitcoin OS are stitching native smart contracts to that liquidity. Hoskinson plans a live cross-chain demo at the 2025 Bitcoin conference, and optimistic models put ADA's 2030 cap at about $1 trillion if all pieces lock in. Big promises, bigger potential, and execution pending.